The bond market is predicting that we're going to get a very significant decline in inflation, thanks to the Fed, once again, I think, oversteering. I mean, I actually believe, before the inflation report today, I was of the opinion, very out of consensus, I was of the opinion that the Fed should not raise rates at all this month. Because there's accumulation, there's a lag on these things. And they've already raised rates by about 225, 250 basis points.
Scenario where they're raising rates so aggressively, meaning just in the last 6.5 months, they've taken it from 0 to 2.5. We actually are talking about whether they're going to do 75 or 100, which is kind of panicked levels of raising rates.
I wasn't aware of that. That amazes me. Are you telling me that? No.
The Fed is raising rates very aggressively to combat inflation, which is, in my mind, one factor, but not the only factor. Raising interest rates are going to have a tremendous effect, a negative effect, on corporate revenues, corporate profit.
There's a very good chance that in the attempt to prove their credibility that they're going to overdo it. And I think at some point here, as I said back in April, they're going to push it until something breaks.
It's their fault. It's their fault. It's their fault. You have failed, and you will pay.
And I think the break will probably come through, equity prices, but could come in another place. It could come in the emerging markets. So, eventually this will end in tears.
You would have to be insane to be the Fed to see what the potential cliff we're on in terms of the economy if they continue to raise. You'd have to be insane to even consider raising if you cared about the economy.
The economy's slowing way faster than you think. Elon was tweeting about the deflation he's seen yesterday. And so I think the risk has shifted to the Fed perhaps over-tightening.
And the marketplace has moved a lot since Jackson Hole and also since the CPI data. So you have a lot of nastiness already priced into the marketplace. And the issue really going forward is at what point will we see the Fed say that they're going to slow this down?
The fifth rate rise this year. It's the steepest increase in rates in history, certainly since Volcker. But the background of the country today is so different than it was when Paul Volcker was chairman. We have $30 trillion of debt, the nation. The increase 1 point, if he goes 1 point on the next week, that's $300 billion of incremental interest expense. $300 billion is half of the defense budget of the United States. It's a lot of money. So the 2 or 3 rates he's done is almost $1 trillion of incremental interest expense. Now, not all our debt is floating. I mean, the economy is breaking hard.
So, Barry, what if I said
confidence is also miserable?
You're a real estate guy. You love low interest rates. You even like inflation. So what do we expect?
So the inflation news is really on the ground, really coming in really well. And that's why I was shocked when Powell was sort of acting last Friday like things are just getting worse and worse and worse.
In the meantime.
Well, since I'm retired and I retired early, it hurts my shopping budget pretty much because now I have to draw a little more out of my savings to keep going.
The prices you see at the grocery store rose 11.4% since August of last year. That's the highest 12-month increase since the period that ended in May 1979.
But I think the reason for the pivot is going to be a massive amount of deflation in the system. It's already here. If you look at commodity prices, the gold price, for example, it actually peaked in August of 2020, and it's at the lower end of a 2-year range, while copper has broken down, oil is breaking down, lumber has crashed, iron ore as well. Freight rates out there are suggesting that the supply chains are loosening up quite significantly. The rates are coming down. So we've got deflation in the system. And the way I describe what's going on right now, I was in my early days in my career in the early 80s when Volcker was taking a sledgehammer to inflation because it was embedded in the system after 15 years of profligate spending, Vietnam War, Great Society, and then going off the gold exchange standard. A sledgehammer, that's what he needed. That is what I believe Chairman Powell thinks he needs. And we just don't think that's true because we see so much deflation, so much deflation.